record to this computer. Here we go.
Got it.
There
Yeah.
we go. Okay. Welcome, everybody. I'm so excited you're here. I'm really, really excited for this. I guess we'll call it a workshop tax strategy with Courtney Epps. She is with OTB Tax. And what I'm so excited for you to hear from her and her presentation, what she offers, because everybody here, I think, is probably in some sort of home-based business, network marketing, direct sales, you know, and I feel like a lot of tax professionals, CPAs, accountants, they're not as experienced in what we do in the field that we're in, and that's one of Courtney's specialties. So I'm super excited. I'm going to hand it over to her. She will have a presentation for you, and then I do have some questions that I got from the group, and then if we have time, we'll open it up to Q&As at the end. But with that, go ahead, Courtney, and I'm so excited to hear what you have for us.
All right. Hey guys. And thank you so much, Tasha, for having me on. I completely forgot that I didn't have my presentation on my office computer, so I had to drive home and get on my home office. So, and we are in the process of moving our offices, and we've got crazy stuff going on with this hurricane, and it just seems like you nonstop, everything's going on. So, if anybody on here has lost anything or in a area that you have been affected by the hurricane. So I do apologize. It's been quite crazy for the last 3 weeks. So just to kind of dive in, give you a little bit of background about me. This picture's a little old. My kids are from the ages of 22 to 11 now. So I have 6 kids. I'm an author, speaker. I've spoken for Les Brown, Tony Robbins, Eric Worre, and spoken on, up to 10,000 people at once. And then, COVID happened and all the events kind of shut down. So I went straight to doing lives and interviews and stuff like that. But what I have done for the last 24 years is I've ran numerous businesses, but I've always done taxes during tax season. About 7 years ago, I decided to take my tax practice and actually do it full time because I don't know about you guys, but I hate taxes and I hate paperwork. So it was something I was very, very good at, but it was something that I really dreaded. And I tried to do everything but accounting my whole life and realized that it's the thing that I'm the best at. It's the thing that I can help the most people at. And so in the process of trying to do all these different businesses, I became involved in network marketing and I was extremely successful in it, really loved it. But what I realized again is that if I stepped out of the network marketing industry, that I could actually help a lot more people by doing tax strategy. So a lot of my focus is really just helping people understand why it's beneficial to get involved in a home-based business, why you should stay in long enough to win because of the mere tax deductions alone, and then how to keep more of your money when you start actually making it. So we have a full service accounting practice here in Greer, South Carolina. We work in all 50 states. We have over 3,000 tax returns that we do every single year. So I'm pretty proud of that. We've grown it to a multi-million-dollar company, and we did it working out of our home up until 2019. And then I had to actually relocate because we had too many employees. So the name of this presentation is Why You'd Be Brain Dead Not to Own a Business. And I truly do believe that just because the tax benefits a lot alone, not even, the fact that you actually, are your own boss and you can do, what you want when you want to, when you actually have built up a legitimate business. But, the fact is that what I learned by actually being in the network marketing industry and doing 900 tax returns for different people in that industry, I realized I could save the average household about $4,000 to $8,000 a year in taxes. And that to me is that's life-changing for the majority of people in this country that are living paycheck to paycheck. And there are two tax systems. We'll talk about that in just a second. There's the tax system that was created to provide wealth for you, and there was a tax system that was created to steal your wealth away. And I believe that is truly the W-2 employee tax system. And granted, I'm not knocking W-2 employees, but I need you to understand that if you don't have some sort of home-based business on the side or a business, you are going to massively overpay in taxes. And that's why I believe you'd be brain dead not own a business. So, and why is this important? I think now more than any time in history, we realize, with inflation, with interest, with taxes, that it's super important to keep a hold of every single dollar that you make. But 46% of Americans don't have an extra $400 to their name. And 69% of Americans don't have an extra $1,000 to their name. And for those of you that are already involved in network marketing, had I understood these statistics, I don't know that I would have ever left network marketing. And the reason why is because I would understand the psychology of why people told me that they weren't going to join my company or why it was not legitimate or blah, blah, blah. Whatever excuse that they had, the majority of them at the end of the day couldn't afford to get involved. So they had to come up with an excuse. But if you can counteract this and help people understand this, it's not spending money out of pocket. You're not spending money. What you're doing is saving money in taxes by having a home-based business. And now you're saving $400 to $800 a month for you and your family by spending 100 or even less than that to be involved in this company. So I don't know if you know this, but the average American will spend more money in taxes this year than they will on food, clothing, housing, and transportation combined. Almost 40% of every dollar that we make goes to pay taxes if you are just a W-2 employee. So when you understand that, it's crucial that we try to figure out ways to strategize to how to keep that money. And the average American household is going in debt $7,000 to $12,000 a year. Now, I'll actually break that down for you in just a second. But the national debt in our country is more than $100,000 per person. And that was $67,000 back in 2020. As I'm sure it's more now. I have not looked at US debt clock. Credit card debt's $8,100. Student loan debt is $39,000 per student. And so what we were taught to go to school, get good grades, and get a good job is currently not working for the population of America. So when you understand the average household income, I'll break it down. So $67,000 a year is what they're making. They're going to pay on average of $14,000 in taxes if they are a family of four, if they have kids. So because they get the child tax credit, that leaves them with a take home of $53,000. The problem with that, and the cost of living is much more. This was based on last year's number. It was $65,000. So now they're going in debt $12,000 a year to work. And it actually was to a point where they were only going in debt about $7,000 a year back in 2020. So things have obviously shifted. So if you work 40 hours a week, 50 weeks a year, take 2 weeks paid vacation, you're literally going in debt $12,000 a year is what the average household income in America is happening. So we've got to figure out a way, and there is a solution, and that's having a plan B. So that's starting some sort of business, that's something you're passionate about, something you can just open your mouth up and tell people about and attempt. That is considered attempting to earn an income. And by doing that, now you have massive tax advantages. And Warren Buffett said, never depend on one income, make an investment to create a second source. And I'm sure everybody else on here has heard that the average millionaire has 7 streams of income. Like you need to at least have 2. With everything that's happening in the world, network marketers, people that work from home, if as long as you have a home, which I know some people don't today, as long as you have a home, you can work. As long as you've got a phone, you've got internet, you can work on your business. And there is a level of residual income that if you can't work, I have a client that's actually dealing with massive mold exposure, and she's posted the other day talking about the fact that her residual income that she's making from her business allows her to be able to work as little as possible to be able to provide for her family and still earn a living, and while she's trying to heal and recover from mold poisoning. So there is some major advantages to having a home-based business. And what I see is that home-based businesses are thriving. And that's been throughout every economy since 2019, before, COVID, during COVID, it was massively thriving. A lot of brick and mortar businesses were having to close because they couldn't afford to pay their rent because nobody was coming to see them. And network marketing was just growing and growing and growing. So getting back to these two tax systems, you've got the tax system that was created for W-2 employees, which I truly believe that's the tax system to steal wealth away because somebody has to pay taxes. Business owners, it's their job in order to make money, which we do every day. We're pushing money into the economy. We are hiring people, and then from there, somebody's not muted. So from there, we're taking that money and we're hiring employees, we're spending money back into the economy, and the W-2 employees are going to pay the lion's share of taxes. That's just the way it is. So we get massive tax benefits as business owners because Congress knows that 70% of all jobs created in this country, is from small to medium-sized businesses. So if they give us massive tax benefits to have businesses and start these businesses, then the hope is that we'll hire employees and then those employees will then pay the taxes. So it just makes sense to me. But how are people supposed to get by and get ahead even planning on retiring if they're living paycheck to paycheck? 48% of US families headed by someone age 55 or older have zero retirement savings. So again, what we were taught is not currently working. And so we have to go around that. And why tax strategy is so important. Again, I shared this earlier that 40% of the average salaried employees money is going to pay taxes. So so where are the taxes going? You've got property taxes, social security tax, federal, state, city tax, sales tax, capital gains tax, use tax, and the list goes on. And I'll tell you this, if some of the political parties have their way, we will pay far more in taxes next year because they're talking about hitting you with capital gains on unrealized income, meaning that if your house taxes were or your house were to appreciate in value, you would end up paying taxes on that money. So lots of things going on with taxes, and next year is a big year for there's a Tax Cuts and Jobs Act that went into effect in 2018 that lowered business owners' taxes by 20%, and that is coming up for renewal in 2025. So, if things don't go the way that they should, we're going to have a major issue with taxes next year. So, how do we get past all of these taxes? One, you have a business. So, like I said, I did over 900 tax returns for network marketers specifically and realized that I could save on average of $4,000 to $8,000 a year by them just having a home-based business and attempting to earn income. And I'm not talking about them spending more money. I'm talking about taking what you're currently spending money on, which are considered living expenses today, and taking those and reverting those into business expenses because of the intention of making money in a business and the attempt of making money in a business. And the attempt is just opening your mouth or sharing with people on social media or marketing. Anything that has to do with marketing is going to be attempting to earn an income. Obviously, all businesses started in either their home or garage. People get started with an idea. All of these different companies have made it really big. So you understand the massive benefit of starting a home-based business that may later, just like ours, turn into a brick and mortar, which I didn't want that to happen because I was getting so many tax benefits of having a home-based business, which we'll talk about a little bit in detail, especially business use of home and commuting miles are huge when you have a home-based business. So what is a tax deduction? What can we write off? And the IRS says that any expense incurred for the purpose of gaining or producing income incurred with a reasonable expectation of resulting in future business and is reasonable under the circumstances. So what that means is if you're attempting to earn an income today or in the future and it's reasonable, then it would be tax deductible. So what that means is, say you want to go to a continuing education event, like a Tony Robbins event or an Eric Worre event, GoPro, all of these different companies. This obviously legitimate to say that that's reasonable that you want to go to that event so that you can learn more, so that you can meet more people, so that you can make more money. That is legitimate. Now, if you just get started in a business and you buy a yacht or a Bugatti or Bentley, I can't tell you that that seems reasonable to start off with, but obviously, as you get higher and higher into the network marketing industry, I have one client that makes over $18 million a year in this industry, and we write off a lot of things, a lot of really luxury cars, because he's in the world and the market of sharing with people what he does and his lifestyle, and then they join him. So it's reasonable to say that that would be a tax deduction. So what deductions are we entitled to take? This is a list, and I'll be happy. I'll give this to Tasha. She can send this over to anyone who wants it. But it just literally lists out 147 different deductions that you're entitled to take by having a home-based business. May not be 147, but there are hundreds of different tax deductions. And what I tell people, the best way to go about it is to have some sort of accounting software or bookkeeping software that's keeping track of every single expense, because some things may not fit into these categories. And so you want to make sure that you're tracking everything and writing off every single thing that would be tax deductible for you. So things like travel, legal fees, tax prep, clothing or dry cleaning that is specific to your business, office supplies, coaching, consulting, continuing education, internet, all of those are tax deductible. So I'll send her that list so you guys can have that deduction spreadsheet. And then you are welcome to reach out to me by email and ask me any questions. So helping you understand, if I take a W-2 employee and I add a home-based business, that would be the same thing as just being a business owner. So and there are a little bit more benefits as you're starting out as a W-2 employee, because you have the ability to offset the income that you're making as a W-2 employee against any losses that you have from your business. So let's look at it. As a W-2 employee, there are very little tax deductions that you have, maybe some on dependent daycare. You obviously get a child tax credit if you have children, and you're under a certain income. Some people, if you're under a certain income, you get an earned income credit. But for the most part, you don't get benefits from living expenses, and 96% of Americans get no benefit from itemized deductions. So I hear people all the time, I bought a new house this year. That's great. But 96% of the time, you're never going to get a benefit from things like medical bills, medical insurance, property taxes, real estate taxes, mortgage interest, charitable contributions. And the reason why there's caps on some, like mortgage interest, if you go over a $750,000 house, you can only claim the interest on the first $750,000. Property taxes, all taxes are capped at 10 grand as far as a deduction. Medical bills and medical insurance, you have to go above 7.5% of your adjusted gross income in order to get $1 in a benefit. Meaning, if you make 100 grand, 7.5% of that is $7,500. You'd have to have more than $7,500 to get $1, but the first $7,500 is not included. So, and then charitable contributions, those are capped at 60% of your AGI. So if you add all of those together and you make more than, or you have more in expenses than 29,000, then, which is the standard deduction, then you would be able to take over and above what that number is. But regardless, you're going to get $29,200 if you're married filing jointly. So most people aren't getting any benefit from there. And then living expenses, things like meals and auto expenses, travel, internet, you're not getting any benefit from that either if you're a W-2 employee. So the unreimbursed business expenses, that went away back in 2018. So that's no longer applicable. Now, when a W-2 employee now starts a home-based business, things like medical bills and medical insurance can be tax deductible. You can have something called an HRA, which is a health reimbursement account. It's not the same as an HSA. HSAs don't allow you to bypass FICA taxes. You still have to pay those. But if you had an HRA, which is a health reimbursement account, let's consider I hire my husband to work for me, and then the employee benefit of me hiring him is as I'm paying all of his medical bills and his medical insurance. And I can do this for my whole entire family, pay 100% of those, and that would be 100% business tax deduction. See, so now I get the standard deduction, And then on top of that, I also get all of my business expenses. So I get to write those off. And the amounts I'm showing you are not, they're not minimums or maximums. They're just average. So property taxes, if I have clients that live in RVs, they drive around the country and go see their team. I have, you've got property taxes on your house, so a portion of that can be written off. Property taxes on your car, a portion of that can be written off based on your business use percentage or vehicle use percentage. And then business use of home. One of the really cool things about business use of home, a lot of people don't know about it, is something called the Augusta loophole. And what it says is that you can actually rent your house to yourself or anyone else for that matter, 14 days a year without having to pay taxes on it. So my business, if I had people over for events or for trainings or, hosting for a training or a presentation, then I can rent my house out from my business. So my business can pay for it 14 days a year without having to pay taxes on it. So what we typically will do is $7,500 a year for the Augusta loophole, but you can essentially go to a hotel, find out a space, what that's a space would be for that hotel in your area or an event center. And then if it's $1,000 a day is what they would charge, then you can essentially charge $1,000 a day for your house for that same space. So 14 days a year, that really adds up. So that could be, $14,000. Charitable contributions. If you love to give back, one of the biggest things that you can do is create a model of giving. And what that looks like is that from your gross income, you say, hey, for every dollar I bring in, I'm going to do this, or I'm going to provide this. It could be a percentage of every dollar that you do. But if you treat your charitable contributions that way, it actually becomes a cost of goods sold item and becomes 100% tax deductible. And guys, I'm throwing these things at you, not for you to get the full context. If you have questions, you can later book a tax strategy session. Tasha will give you my link to book that. But I just want you to kind of get the gist and understanding of how beneficial having a business is and how to take what you currently don't get to write off and force those now to be tax deductible. So mileage things. So if I get in my car, I call my friend and I say, hey, look, I want to share something with you. I'm super excited about it. Yeah, get in my car, drive to, sit down and have lunch. Not only can I write off my mileage, which is 65.5 cents a mile now, or I can do actual expenses. So whichever one becomes better, depending on how much of your vehicle you're using for business purposes, it may be better to do actual expenses, write off the, property taxes, the insurance, the interest, the oil changes, repairs and maintenance. You can depreciate the car or you can do mileage. So either one, it tends to be that, if you're using the vehicle more than 50% for business, then actual expenses are going to be better. But, some people drive 30, 40,000 miles a year on their business. So mileage ends up being better. So we typically will take both and determine which is the best situation for the client. So I sit down with them. I drive to them. Let's say it's 50 miles. So I'm getting a tax deduction there. I'm sitting down having a conversation with them during a meal. So I get to write off my meal. 50% of my meal is tax deductible. Then I need my cell phone to run my business. So, let's say we're using 90% of the cell phone, 90% of the internet's used for business. So I get to write off 90% of that. And then you've got things like travel. So, and this is not only for yourself, but anyone who's helping you in your business, which could include your spouse and your children. So, you may spend a couple $1,000 a year in travel. You may spend more than that, but these are just kind of averages that I see. And then on top of that, you can hire your kids to work for you. And now you can actually pay them $14,600 a year. And so they don't pay taxes on it. And it's a tax deduction for you. And I do have a little bit more detail on that I'll talk about in a second. And then things like office supplies, legal and professional fees, tax prep. I mean, you name it, anything that you are attempting to earn an income off of, is a tax write-off for you. But these things that I'm showing you in the middle, these are things that aren't necessarily extra expenses. They're just things you're already spending money on. Now you get to write those off as a tax deduction. And so, extra expenses may be advertising or continuing education or dues, cost of goods sold. And as you can see, we've totaled up just in these little bit of expenses, 35 grand in tax deductions. And so I'm not even going to use that number. I'm going to use 25 grand so you can kind of see what happens. If I take the average W-2 employee household, I've got single person, $60,000 a year, married, making $67,000 a year. You can see their taxes, their take home, the cost of living, and what's left over, which is zero. They're in the negative. Now, if I take that same person, W-2 employee, and they start a business, I have my same income. Let's say they make nothing the first year, which is fine as long as you can show that you're attempting to earn income. And per the IRS, just so you're aware, attempting to earn income is spending 3 to 5 days a week for 45 minutes a day sharing with people what you do. So showing that attempt could be Facebook post, it could be Facebook messages, it could be phone calls. So I've never had anyone have to prove to the IRS that they were truly attempting to earn an income, but you could easily see, having a calendar that says where you went and what you did. Those are easy ways to do that. So I take that same income, have the business expenses now. Here's my standard deduction. Would use that to make it easy. The taxable income, taxes, take home, cost of living, and here's what's left over. So now I'm in the clear. So as a single person, that's an extra $5,200 in your pocket home a year. And if you're married, that's an extra $5,300 a year. And you would have to make an extra $3 an hour as a W-2 employee to be consistent with the tax savings of just owning a home-based business and attempting to earn income. So when you understand that, it becomes imperative. Wow, I need to start doing something. Well, now, as you're attempting to earn income, you will eventually sell something and people will start buying from you. I know the statistics are at 1 in 10 will buy from you regardless. You just have to ask them. And so if I start making some money, now let's say I'm making an extra $500 a month, now I've got same business expenses that hasn't changed, taxes, take home, cost of living, and here's what's left over. Now I have a difference of over 10 grand. If I'm single or married, that would be equivalent to almost $7 an hour in an increase in your pay. So at the end of the day, I mean, it is a huge deal, and people need to look at it not as an expense, but a massive tax benefit for them. So again, it's about $400 to $700 a month that the average household is going to save in taxes just by attempting to earn income, because now it can force all the things that they're currently spending money on to be tax deductible. So hiring your kids. So kids are obviously expensive. I have 6. So $14,600 a year, you can pay them. If they're under the age of 18, there's major benefits to that. There are no taxes at all. There's no FICA, no federal, no state, no unemployment, no taxes at all. And if they're over the age of 18, then we need to look at the numbers depending on your tax bracket. It may be beneficial to pay them a small amount of money for payroll, and you can actually start providing them employee benefits, things like college education. You can do up to $5,250 a year for college education. You can pay for them to go on trips with you because they're helping you with your business. So there's other options that you can go around if they are over the age of 18. But definitely this is a huge benefit to anyone with kids. And it saves on average of $4,000 to $5,000, depending on your tax bracket per child, to pay them that money. And then it doesn't matter what you do with the money. So you can't transfer it back to your bank account, but if you pay the kids, then the kids can in turn pay for vacations, or they could pay for travel. They could pay for their cell phones. They could get a Roth IRA. You can do whatever you want to do with the money after it's gone into their account. So you just have to transfer the money into their account. There's some payroll tax returns that have to be filed. We can obviously help you with that, but It's a pretty simple process. So when you start making more money, there are things, uh, there are really amazing tax deductions for people that make over, $350,000 a year. So morally and ethically, you can keep more of your hard-earned money. One of my favorites is something called a conservation easement. If you're in a 35% tax bracket or a 37% tax bracket like I am, conservation easement is literally putting money into a program that buys land and gives it over to the government. I don't like giving anything to the government, but I would much rather give them land that is a 5-time multiple, meaning I can put in $20,000 and get $100,000 tax deduction, which saves me $37,000 in taxes. So spend 20, save 37. That makes a lot of sense to me. So things like conservation easements, the HRA I talked about, hiring your kids. There's other employee benefits that you can have access to as well. I have a really good, easy to read book called More Relaxing, Less Taxing that will give you a lot of different employee benefits that you can help implement. So, and those employees can be your spouse and your children as well. The government, as I said this earlier, allows you to offset any losses that you have from your business against any other income. So it could be capital gains, it could be W-2 income, dividends, all of that can go directly against the losses and lower your taxable income. Now, you will always, and I'm just going to reiterate this again, as a W-2 employee, you always pay more money in taxes than you will as a business owner. And the reason why is a W-2 employee, they are going to make their money, then they have no say-so on their taxes. Then they buy their wants and their needs, hopefully all of their needs, right? And then as a business owner, you can truly make money in your business, have business expenses, which are also redirected living expenses, a lot of them, which are your wants and your needs, and then you pay taxes on that money. It is truly the wealth system. So, don't be brain dead. Have some sort of business, decrease your taxes, which is the fastest way to wealth. And in summary, there's never been a better time, guys, to have a home-based business. So, and regardless of what that is, it doesn't matter to me. I just believe that people should find something that they can open their mouth up and truly talk to people about. And that makes it where it's not a business anymore. They're not attempting to earn income. They're attempting to save money in taxes, which is a guarantee. And then from there, you will in turn, because you're not concerned about whether people join you or not, you're just concerned about sharing the information to save money in taxes, more people will join you. And so it's kind of crazy how that works, but it does. And so start a home-based business. Take the tax deductions that you're entitled to take. If your accountant is telling you that you can't write off certain deductions and you know that you are using them to attempt to earn an income, I wouldn't even fight back on them. I would find somebody who actually understands the industry and hire them to prepare your taxes. Hiring your family is a huge tax deduction. Hiring your children, hiring your spouse for that HRA, which is the medical bills and medical insurance. That also includes medical sharing. So if you have an HRA, you cannot write off medical sharing without an HRA, but you can write it off with an HRA. And so a lot of people are going that route. To me, I think medical sharing is a much better plan than health insurance anyway. So hiring an accountant is a big deal. I've had less than 10 clients audited in the last 24 years of me preparing taxes. I've had 3 corporate tax returns audited in 24 years. So when you hire an accountant, one, typically, if they're a good accountant, it's going to include audit protection, which our tax returns do. And so if you get audited, we handle it. We obviously have to get backup documentation from you. But if you have an accountant who's not willing to help you with tax deductions, they're more than likely not going to be willing to help you with an audit. So you need to have that conversation. And so it also triggers, you're more likely going to trigger an audit if you try to prepare your own tax return. So I don't suggest you doing that even through a software like TurboTax or something like that, because when you have that second hand, an accountant that's handling it, the IRS, we have to fill out paperwork and say that you gave us the information. Based upon that information, we prepared the return. So it just makes you less likely to be audited if you have an accounting firm that's doing the taxes. The last thing is keeping track of your expenses. It is imperative that you keep track of your expenses, especially if you were to ever get audited. One of the softwares that I really love is called Hurdler. QuickBooks is great too. QuickBooks is just 4 times more expensive and it's a little bit harder to use. Hurdler is a really good option for you guys to, as a business owner. It's a lot easier to use for business owners than you being an accountant. So accountants know QuickBooks. That's what we've been using forever and a day, but Hurdler's a lot better software. It allows you to pull in your transactions from your bank accounts, your credit cards. It'll actually generate a P&L for you. You can upload receipts. You can, it'll do GPS tracking for you so you can upload your mileage, and it'll help take care of that to make you more audit proof. So, and share this with everyone, guys. I mean, not everybody gets involved in the network marketing industry because they want to make money. That's one of the things that, when I was involved, I was like, why wouldn't anybody want to make extra money? There are some people that make too much money and that they're not interested in making more money because they feel like they'll pay more taxes on the money that they make. And there are also people that get involved because they see a product that they really love and they just want to share that with people. So there's different reasons why people get involved, but everybody should get involved in the home-based business industry for the tax benefits alone. And then from there, take the pluses that come with it. So there's never been a better time, to have your own business. I have a book called What's Your Plan B? It's specifically geared towards the network marketing industry to help people understand why they have to have a home-based business, because it does matter how much you keep and instead of how much you make. And we have to do everything we can legally, morally, and ethically to keep every dollar that we possibly can. So I think Tasha will give you guys a link to get on my calendar that you can book and book a tax strategy session. That's not the purpose of doing this today is to help you just understand why you've got to have a home-based business, why you should be attempting to earn income. And then I think you have some questions for me, Tasha, too.
I do. And oh my gosh, that was so informative. Like, I'm just like, I mean, we've talked before and I'm still just like, oh my gosh, like this is wild. So yes, I do have a couple questions that were from our group as well as questions that I've just had. So the first question is somebody asked, as a UGC creator, so if for those of you who don't know, that's user generated content. So, as a UGC creator that's just starting out with not much income yet, is it smart to start an LLC or wait until income is more stable?
Oh, yes. And I didn't go into this, but I'll explain it now. I have some slides, but I think this is the short presentation. So once you hit the point where you're making $1,000 a month, it is very beneficial for you to get an LLC. And there's no benefit to having an LLC other than limiting your liability to start off with. But what happens is, I know once you get to $1,000 a month, you'll get to $2,000 a month. So you'll start making more money. And so once you get to a point where you're making $1,000 a month after expenses, meaning net income, so gross income, making $1,000 a month, you should have an LLC. And then the great part about having an LLC is you can later treat it as an S corporation for tax purposes, which means that you can bypass 80% of the self-employment taxes that you would typically pay. So one of the biggest reasons why people think business owners pay more money in taxes is because as a W-2 employee, you pay FICA taxes, which is 7.65%, and then your employer has to pay 7.65%. So when you add those two together, that's 15.3%. Okay, so as an employer or a business owner, you have to pay the entire self-employment taxes, but you're only paying that on your net income, not your gross. So as a W-2 employee, I make $100,000 a year. I have to pay $7,650, which is 7.65%. As a business owner, I make the same $100,000, but let's say I had $50,000 worth of legitimate business expenses. So now at that same 50,000 mark, I'm paying 15.3%, but that's still $7,650. As a LLC treated as an S corporation, so I go a step further, I can take that same $50,000 that I'm making, or I'm making 100, but 50,000 is my net after expenses. I'm now paying $1,500 in self-employment taxes as opposed to 7,650. So the only real difference in an is in a S corp and a filing a tax return, your personal tax return, is you're just saving on self-employment taxes. So the way to do that cheaply and do it when you need it is have an LLC first. Once you're making $1,000 a month gross, and then once you get to a point where you're making 1,000 after tax, after expenses, excuse me, you'd have that LLC, and we would treat that just by doing some paperwork to the IRS as an S corporation for tax purposes. So it just eliminate even more taxes. One
Very
of
cool.
the biggest, yeah, and I'll say this one because I meant to say this earlier. As a W-2 employee, if I made the 100,000, I have to pay federal and state taxes on the entire 100,000. As a business owner, I get a 20% deduction from that. So not only can I write off my expenses from the business, but I also don't have to pay taxes on 20% of my net income. So if I got my income down to 50,000 from my expenses, and then on top of that, I take another 20% off, I'm paying taxes on 40, and the W-2 employee is paying tax on 100. So big difference.
Yeah, that is definitely. Thank you for that. And then next question is for a like network marketing or direct sales, samples that are purchased as well as your own products. Are those
So
ex
it's kind of up in the air on,
those up?
it depends if you were to get audited, it depends on the auditor. But if you are using, to me, at the end of the day, I can't share something that I'm not taking. And I'm not, so I have to take it in order to have a story, especially if you're in the hair care industry and you're showing, well, this is before and after. If you're in the nutrition industry and you're showing before and after. So as long as you're using those products to share your story and to make more money, then it would be hard for an auditor to argue that.
Right.
This
Okay.
this is the one thing I will tell people is that don't get involved in a network marketing company, not share it with anybody, and then expect that you're going to come to me and say, "Hey, I want to write off all my samples," because then I'm going to be like, "Well, did you attempt to earn an income?" Well, no, I didn't. I didn't really attempt to earn an income. I just bought all these products. Then I can't write that off for you. But if you
Right.
are truly attempting to earn income, whether you do make money or not, and you're using that to share a story, then yes, that would be tax deductible. And samples are always tax deductible. That's advertising.
Okay. And so would it be the same category for products that you're using to show before and afters or social media or whatever? Would it be the advertising category?
That's where I typically put it.
Okay.
Yes, advertising.
Awesome. Okay, next, as a content creator, what is considered a beauty expense and what category would that go under?
So there, but like nails, makeup, hair, things like that can be tax deductible if you are showing a presence online. So if you're just buying that stuff and you're never showing anybody, on social media,
Mhm.
it's hard to write them off. But I'm a speaker, so I write off everything. What I love about what I do is I get to write off everything that you guys write off. So I kind of my business, and I can go to all 50 states and see any of my clients, and that be a tax deduction. And that's the way network marketing is. You can do it anywhere, so you can almost force anything to be tax deductible if you're using it to make more money. The one thing I will say are clothes. Clothing is depending on what you're using the clothes for. Like if I were to go to an event like a cocktail dress or a evening gown, or something specific that I'm wearing that I wouldn't wear out on the town, just to walk around, that would be tax deductible. But clothing that you're buying and you can use for any day, that wouldn't be tax deductible.
Okay. And would that also be like a marketing or advertising category?
Yeah, the beauty stuff would be
Yes.
marketing, would be
Marketing.
advertising.
Okay. Awesome. I'm writing all this down as you're answering, so thank you. Okay. Should I have a separate bank account and or credit card for my business?
You should always have a separate bank account or credit card. Even if it's not in your business name, you should have a secondary. Just because if you ever get audited, it's a lot easier to just provide, here's the bank statements, here's the credit card statements. The other would be that when you're trying to go through all of these expenses, especially if you're trying to do it by hand, which I don't suggest, then it's a lot easier to go through the expenses and know this is just straight business. So it's just easier.
Okay. So then that card or bank account would be everything you use for business, just use that card.
Correct.
Okay.
Yep.
And then I need an efficient way, and you kind of touched on this, but I need an efficient way to track all my expenses throughout the year.
Yeah, that would be Hurdler. And I'll put that,
Okay,
we have a contract with a Hurdler, and I'll put that link right there. I just added it.
perfect. So that was the questions I had, and then I see a question in the chat here. What if spouse has become home-based business already and recently started MLM and insurance sales? Any additional on this?
No, I mean, it's home-based business is home-based business. So if you have a business and you have a set office, then obviously you can write off that portion. If he has one, he can write off that portion. The one thing I will say, especially if you are like the insurance sales and MLM, they can all be combined into one. So like when I was doing network marketing, OTB Tax owned my network marketing position. And so I only did one corporate tax return a year. So all of my income was included in that. So, definitely if you're making, if you're making more than $12,000 a year net, you need to really consider having an LLC treated as an S corporation. And that could be all of your income together, you and your spouses, and a lot of people have them and their spouse have a position in the company. So you can combine that together and do an LLC treated as an S Corp and both of you be the owners of it.
Got it. That actually brought up one other question. Um, I recently got an LLC, so this is my own personal question. Um, does my income from whatever source it's coming from need to be paid as the business name, or can it still be paid to Tasha Gutzmer?
It should be paid over into the LLC, but if it's not, we can still adjust it. So you have to show the income on the Schedule C and then show where that income went to. So essentially, you're just listing it as an expense back up to the corporate. But to make things easier and more legitimate, it would be best that everything go through the LLC.
Okay. Awesome. Does anybody else have any questions? This was so, so good.
Thank you.
And I did record this. I am gonna get this out. And then I put all the links up in the chat for the books and the strategy session and everything that we talked about. So I am so excited that we did this. Courtney, again, thank you so much for doing this. Oh, Bobby asked, does she work in any state? And I can answer that. Yes, you work
Yep.
nationwide, correct?
Every state. Yep.
Yep.
I
So
have a quick question.
sure,
Yep.
go ahead, Ashley.
Okay, so we were looking at hiring an interior decorator to come and like stage our office for content pictures and things like that. Would hiring her be a tax write-off?
So I'm going to take you back to and ask you a question. Are you using it to attempt to earn income?
Mm-hmm.
There you go.
Okay.
It doesn't matter what it is. It's just, are you spending the money to attempt to earn income? Like, so I was a platinum partner with Tony Robbins for 2 years, and that's $75,000 a year. So it doesn't matter. Like some people would say, well, hey, that's continuing education because you're learning how to grow your business. Some people would say that's advertising because while I'm going to the event, I'm going to meet people, right? And then part of that's travel. So it doesn't really matter what category you put it into, whatever makes sense to you. What matters is, are you attempting to earn an income? Yes or no? And if you are, then put it somewhere into a category. Even if you create a category, then whatever makes sense to you, that would be a tax deduction. But in that situation, that interior designer, you need to make sure anyone who you pay over $600 a year to, then you need to send them a 1099. So you get a W-9 from them and send them a 1099, and we can help with that. You can send as many W-2 or 1099s to people as you want to, but if you get audited and you're taking that deduction and you haven't given them a 1099, then it could be disallowed.
Got it. Anybody else have any questions while we have Courtney? I feel like I want to stay on with you all day. Anything else? I will definitely get Courtney's information to anybody that wants to reach out, has questions, wants to book a tax strategy with her. I'm super excited to work with her because so much of this, like I said, a lot of accountants and CPAs just aren't familiar with what we do. So, they might say no because they don't know, right? Like if you're like, can I write this off? Can I write that off? They're just not specialized in this department. This is so helpful. I thank you again so much, Courtney, for being here.
You're welcome.
And I think that's it for now.
Awesome. And the one thing, Tasha, the reason why accountants aren't for this industry is because we're taught it's not legitimate in college. We're literally taught that network marketing is not a legitimate industry. You do not want to deal with anybody in the network marketing industry. They're more highly likely to be audited because they have a home-based business. And that's just not true. After doing almost 3,000 tax returns every year now, I had, just like I said, I've had less than 10 audited. None have been audited for home-based business, period. And 3 have been corporate clients, and they were all brick and mortar clients. And they were massive income. One of them was $6 million, one was $18 million, and one decided to take a loss of over 100 grand for 25 years. So we lost that lot. We lost that one because the auditor clearly said, he's like, she has been a W-2 employee making over 100 grand a year for the last 25 years and has paid in total of $151 in taxes. 25 years.
Yeah.
And he's like, we're not going to go backwards, but we're not doing this anymore. This is a hobby. This business has lost 100 grand every year. It's now a hobby and you can't use it anymore. So that has been my experience in auditing.
I love it. Well, everybody, like I said, Bobby just asked, can you look at old returns?
Yeah. So we can go back 3 years. So you can actually amend 21, 22, and 23 right now. And then you can go back if you had an LLC and you overpaid in self-employment taxes, you can actually go back 3 years and 75 days from today. So we amend tax returns every day. We probably do 3 to 5 amended returns every day.
Wow.
So it's a lot. Yeah.
All right. And this again, TS, I'm not sure your name on here, but it is recorded, so I will get the recording out to everybody. Thanks again, Courtney, for being here. We'll talk soon because I have some stuff to work out with you. And thank you all for being on.
Thanks. Bye.
Thank you.